As of January 7, 2026, the Tilray Brands intraday price is currently sitting at $9.06, which represents a decline of approximately 2.21% from the opening bell. We're watching the tape closely today as the stock has carved out a range between $8.81 and $9.56, showing significant volatility just 24 hours ahead of a massive catalyst. While the broader market might look at this 2% drop as just another red day for a speculative small cap, the reality under the hood suggests a massive tug-of-war between retail sentiment and institutional positioning. Most people are focused on the headline number, but the real story is the volume spike we're seeing in the final hours of trading. There's a common belief right now that Tilray is simply a play on federal legalization, but that expectation is actually blinding investors to a much more immediate reality. The company has spent the last year quietly shifting from a pure cannabis play into a diversified consumer packaged goods powerhouse. If you only look at Tilray through the lens of a marijuana stock, you're missing the fact that they are now one of the largest craft beer producers in the United States. This diversification is meant to be a safety net, yet the market still trades it like a volatile biotech startup. We're seeing a classic tension here. The market expects a cannabis boom, but the reality is that Tilray is building a traditional alcohol and wellness business to survive the long wait for Washington to act. When you look at the recent movement, Tilray has been on a wild ride over the last month. We saw the price target raised to $10 by some major analysts recently, which provided a temporary floor, but the stock is still struggling to break through heavy resistance near the double-digit mark. Trading volumes have stayed consistently above their 30-day average, signaling that big players are either exiting positions or loading up before the January 8th earnings call. Institutional activity has been mixed, with some hedge funds trimming their exposure to wait for more clarity on the U.S. medical cannabis strategy, while others are using the current dip as an entry point. It's a high-stakes environment where every penny matters. Speaking of entry points, if you're looking for investment help or exploring investing sites to figure out where to park your capital, you've likely seen Tilray pop up on a lot of watch lists. Whether you prefer a self-investing approach through something like a Robinhood account or you're more aligned with the institutional feel of an interactive broker's account, the technical setup here is impossible to ignore. We are currently testing the lower bounds of a multi-week ascending channel. If the stock fails to hold the $9 level by the close, we could see a quick slide back toward $8.50. However, if the bulls can defend this intraday low, it sets up a potential short squeeze scenario heading into the earnings report. I want to pause here for a second and get your take on this. Comment below how many shares of Tilray stock you currently hold, or if you're waiting for the post-earnings dip to buy in. It's always interesting to see how the community is positioned before these big binary events. The macroeconomic pressures on the sector haven't been kind lately. Higher for longer interest rates have made it expensive for growth companies to maintain their debt, and Tilray is no exception. They've had to be aggressive with their cash management. However, the recent news about the government considering the reclassification of marijuana has acted as a persistent tailwind, preventing the stock from sinking back to its 52-week lows near $3.50. The sector momentum is fragile, though. When you compare Tilray to its peers like Canopy Growth or Aurora, Tilray has shown more resilience primarily because of its revenue-generating beverage segment. They aren't just burning through cash anymore, they're actually selling products people buy every day, like non-alcoholic beers and hemp-derived beverages. This brings us to what Tilray actually does for those who might be new to the ticker. At its core, Tilray Brands is a global lifestyle and consumer packaged goods company. They operate in four main segments: beverage alcohol, cannabis, distribution, and wellness. Their business model is built on the idea that they can use their massive distribution network in Germany and Canada to scale quickly whenever a new market opens up. In the past, they've relied heavily on older reports of European expansion, but today they are much more focused on the U.S. market through their Dry January offerings and craft beer brands. They've essentially built a Trojan horse. They are an alcohol company today, so they can be the dominant cannabis company tomorrow. Past performance hasn't been a pretty picture for long-term holders. If you've held this stock for 5 years, you're looking at a significant loss. But the market isn't a rearview mirror. The current sentiment is driven by the expectation that Tilray can finally turn a consistent profit. Last year, they managed to surprise the street with better-than-expected revenue, which sent shares soaring 18% in a single day. That's the kind of volatility we're dealing with. If they beat the minus 0.06 EPS estimate tomorrow, we could see a repeat of that move. If they miss, especially on the revenue side for their beverage division, the diversification narrative might start to crumble in the eyes of skeptical investors. The reality of the situation is that Tilray is currently caught in a regulatory limbo. They have the infrastructure, they have the brands, but they don't have the full legal green light in their most profitable target market yet. This creates a gap between what investors hope will happen and what is actually occurring on the balance sheet. While you're managing your individual brokerage or maybe checking your Fidelity mobile app to see how your other positions are doing, it's worth noting how Tilray fits into a broader portfolio. It's a high beta play that can provide massive returns, but it can also be a significant drag if the timing is off. For those using a more automated approach like Schwab Intelligent Portfolios or a SoFi Robo-Advisor, you might not see a lot of direct exposure to individual names like this, as they tend to favor more stable Fidelity ETFs or mutual funds. However, for those of you who prefer online investing and picking your own winners, Tilray is often the go-to name for the sector because of its liquidity. You won't find many other cannabis-adjacent stocks with this kind of daily volume and options interest. It's a favorite for day traders on the Robinhood app specifically because of the fractional shares and ease of access. Looking ahead, the future outlook for Tilray depends on a few specific catalysts. First is obviously the earnings report on January 8th. Beyond that, we're looking for any movement on federal tax reform for cannabis companies. If the 280E tax burden is lifted, Tilray's valuation could be reset overnight. The risk, of course, is further dilution. There has been ongoing chatter in investor circles about whether the company will need to issue more shares to fund its U.S. expansion. If they announce a new capital raise, the stock will likely take a hit, regardless of how good the earnings numbers look. This is the reality that often bites investors who are only looking at the expectation of legalization. If you're navigating these waters through a Fidelity brokerage account or using the Interactive Brokers platform, you have to be disciplined. The volatility in Tilray stock can be stomach-churning. We've seen it drop from $23 to under $4 and now climb back toward $9. This isn't a set-it-and-forget-it kind of investment. It requires active monitoring of the news cycle and an understanding of how the beverage alcohol segment is subsidizing the cannabis growth. The synergy between these two parts of the business is the key to their long-term survival. As we wrap up this analysis, let's look at the central insights. The expectation is that Tilray is a pure-play lottery ticket on U.S. legalization. The reality is it's a diversifying consumer goods company that is using beer and wellness products to stay afloat while waiting for a regulatory shift. Today's intraday move to $9.06 is a reflection of the nervous energy in the market before tomorrow's big reveal. We've seen a 2.21% drop, but the volume suggests this isn't a mass exodus, it's a positioning move. Whether you're using SoFi Invest for active trading or keeping things simple with Fidelity IRAs, the takeaway is the same. Tilray is currently a battleground stock. The gap between expectation and reality is narrowing, but it hasn't closed yet. If the company can prove that its beverage division is growing fast enough to offset the regulatory delays in cannabis, we might finally see a sustainable breakout. But if the earnings show a slowdown in consumer spending on their craft brands, the stock will have a hard time maintaining its current momentum. To summarize, we are sitting at a critical juncture. The stock is testing key support, the earnings are imminent, and the regulatory environment is more active than it has been in years. The authority on this stock doesn't come from guessing when legalization will happen. It comes from understanding the balance sheet and the diversification strategy that Tilray has put in place. Keep an eye on the $8.80 level tonight in the after-hours session. If we break below that, tomorrow morning could be a very different conversation. If we hold, the path to $10 remains open. This is the reality of trading in a sector that lives and dies by the stroke of a pen in Washington, and Tilray is the biggest lightning rod in that storm. As you look at your own portfolio, whether it's through a Robinhood stock trading setup or a more complex Fidelity wealth management plan, remember that companies like Tilray are the ones that define market sentiment for entire industries. We'll be here to track every move as it happens. Make sure you stay focused on the data and don't let the noise of the headlines distract you from the actual numbers on the tape. The market is efficient, but it's also emotional, and right now, Tilray is one of the most emotional stocks on the board. Would you like me to analyze the specific details of the upcoming Tilray earnings report and how it might impact the broader cannabis ETF sector?